Hello and welcome to the third topic of Module 11. This module will focus on the importance of public-private partnerships, debt financing and crowd-based platforms in the healthcare sector. The topic is separated into different sections including public and private partnerships or PPP in Europe, the leading PPPs in the healthcare sector, information about department financing options for your startup, an overview of crowd-based platforms in Europe, and some examples. Let's dive right in and understand what public-private PPPs are. A public-private partnership, PPP, in healthcare is a collaborative arrangement between a public sector entity, such as a government agency or a public hospital, and a private sector entity, such as a company or a non-profit organization, to deliver healthcare services. This partnership often involves sharing risks, costs, and benefits. PPPs exist in different models. For example, there are traditional and innovative PPP models. Major traditional PPP models are separated into different categories. The first in the design build operate. In this model, the private sector partner is responsible for designing, building, and operating a project, such as a hospital or a road. Once the project is completed, the public sector entity may lease the facility or purchase it outright. The second is the build-operate transfer. In this model, the private sector partner is responsible for a project. After a specified period, ownership of the project is transferred to the public sector. The third is the lease-operate transfer. In this model, the public sector entity leases land or assets to a private sector partner, who is responsible for a project. After a specified period, ownership of the project is transferred back to the public sector. The innovative PPP models include the public-private partnerships for innovation, which are a more recent development and they focus on fostering innovation and technological advancements in the public sector, and the social impact bonds, which are innovative financing mechanisms that aim to address social problems by mobilizing private capital. In a SIB, investors provide funding to a service provider to deliver a specific social outcome. Overall, PPPs share some similar characteristics in the field of healthcare. For example, both public and private partners share the risks and rewards associated with the project. Secondly, PPPs typically involve long-term contracts that outline the specific roles and responsibilities of each partner. Aside these, many PPPs are structured as performance-based contracts, which incentivize the private sector partner to deliver high-quality services. PPPs can also be used to finance and develop healthcare infrastructure, such as hospitals, clinics, and medical facilities. And lastly, PPPs can be used to deliver a wide range of healthcare services, including primary care, specialized care, and public health programs, and foster innovation and technology. Choosing the best PPP model for your startup in healthcare or health tech is a process that requires careful consideration of several factors, including your specific business model, the nature of your innovation, and the level of public-private collaboration. Other considerations that you need to take into account when looking for PPPs include: to ensure that PPPs align with your business model, to identify the right public partner based on your needs and expertise, to define clear project objectives and understand what do you aim to achieve through PPP, to develop a strong business case that will highlight the potential benefits of your solution, such as cost savings, improved patient outcomes, and increased efficiency. And lastly, to make sure that you will negotiate a fair and balanced contract via a clear definition of roles and responsibilities. Some additional tips for choosing PPPs include the establishment of strong relationships with key stakeholders and the involvement of a legal and financial entity, to ensure that your PPP complies with relevant regulations. Also, you need to be flexible and adaptable and be prepared to adjust your approach as the project evolves. And lastly, you need to study relevant case studies and learn from others. By carefully considering these factors and seeking expert advice, you can identify the most suitable PPP model for your healthcare startup and increase your chances of success. Now, let's explore some leading PPPs in healthcare innovation across Europe. First is the Innovative Health Initiative. This is a collaborative effort that unites experts from different fields and funds innovative projects. Second, on the list is LIVA Healthcare. LIVA, is a London-based company that has now expanded in Denmark. They get public and municipal support for scaling digital health solutions. The third brilliant example of PPP in healthcare is Santé Numérique Alliance. They collaborate with local authorities and fund many initiatives related to digital health. Another example of PPP is the H2I Health. The H2I Health is a unique public-private partnership that brings together leading companies, research centers, and universities to drive innovation in healthcare. The next part of this topic includes information about department financing for startups in the sector. Debt financing can be a useful tool for startup founders to fund their business ventures. In simple terms, debt financing involves borrowing money from a lender with an agreement to repay the loan with interest over a set time frame, and it can be used to cover startup costs such as purchasing equipment, hiring staff, and expanding your company to new markets. To understand the debt financing, the startup owners need to understand the basis behind this term. In general, debt financing involves borrowing funds to finance a startup's operations or expansion. This typically involves repaying the loan, along with interest, over a specified period. To secure the loan, startups often need to provide collateral, such as property or equipment. Lastly, startup owners need to understand that repayment terms are crucial for their financial planning. There are different types of debt financing that startup owners need to know about. These include term loans, revolving credit facilities, the asset-based lending, and mezzanine debt. All of these different types of loans can benefit startups based on their needs and available funds or assets. Startups owners need to investigate carefully which type of debt financing fits their needs best. However, before deciding to pursue debt financing for a startup, it's important to consider the pros and cons. On one hand, there are a few advantages of taking on debt financing as a startup founder. For example, debt financing can help you avoid giving up equity in your company while providing you with access to capital that can be used right away. On the other hand, like any other type of loan or investment, there are risks associated with taking on debt financing as a startup founder. The biggest risk is not being able to repay the loan when due, which may result in added fees or even bankruptcy for your business. Additionally, it can be difficult for startups with limited operating histories to secure debt financing. Before taking on debt financing, it's important to consider all the risks and rewards of doing so in order to make an informed decision. But what are the major sources of debt financing for healthcare startups? First, there are banks and financial institutions. Another option is government-backed loans and grants. Beside these, startups can look for non-bank lenders and crowdfunding platforms. But let's move on and explore the major options for debt financing of startups in Europe. The first option is the European Investment Fund. This fund is provided by the European Investment Bank, and they offer targeted financial products to enhance SMEs' access to finance. The second option is the venture debt by Silicon Valley Bank. This is a specific type of loan offered in the form of venture debt by specific banks. For more information for both debt financing options, you can visit the links provided in the slides. Moving on, we will explore the popular crowd-based platforms for healthcare startups across Europe. First, let's understand what crowd-based platforms are. Crowd-based platforms are digital platforms that enable startups to raise funds from a large number of individuals, often in smaller amounts, through various crowdfunding models. Different crowd-based models exist, and the startup owner can look for which fits their needs best. For example, there is the equity-based crowdfunding. In this model, funders receive shares in the company. Another model is the reward-based crowdfunding. In this model, funders receive non-monetary rewards, such as early product access. Aside from these, donation-based crowdfunding exists, where supporters donate without expecting financial returns. Lastly, another model is the debt-based crowdfunding. With this model, startups borrow funds and repay with interest. But how can healthcare startups benefit from crowd-based platforms? First, it is important to acknowledge that crowd-based platforms provide access to capital. Also, these platforms offer market validation. They build a community of early adopters and advocates and can help promote one startup. Another advantage offered by such platforms is the flexibility. Various crowdfunding models suit different needs, such as equity for growth or rewards for early-stage development. In addition to this, startups get increased visibility from crowd-based platforms since they can attract attention from investors, partners, and the media. Lastly, crowdfunding offers reduced dependency on traditional funding and alignment with impact-driven goals, tailored to the needs of each startup. So, let's explore some tips for startups who are looking for crowd-based funding. First, they need to define clear goals. They need to know the precise amount they need, and they have to break down how the funds will impact their goals. Second, they need to find a platform that fits their sector and needs. Third, they need to develop a compelling story and highlight the significance of their product and work. Fourth, they need to invest in high-quality content and create professional videos that will describe their mission in detail. Fifth, they need to engage their network early, promote their campaign via digital channels, and offer attractive incentives. Lastly, they need to be transparent with the people who fund them, and they need to update them regularly. Now, let's explore some popular crowd-based platforms for healthcare startups and how startups can find them. A significant number of crowd-based platforms are available in the EU. Startup owners can explore their different options by using the link in the slide. However, the best way to search for a crowd-based platform is via a database. The most well-known databases are the ones that are shown here. The links for the databases are available on the slides. Overall, this topic aims to focus on debt financing options, PPPs, and crowd-based platforms for healthcare startups across Europe. For more information about the topics discussed, you can visit one of the following references mentioned here. Thank you for your attention.